Some people would call my portfolio reckless. I sell options on volatile stocks. I dollar cost average into crypto and invest into various different stocks and ETFs. But through all that risk, I'm actually up 27% in just the past year, overall up 35%. And I'm pretty proud of that. I'm going to show you why this risky strategy actually works. But before we get into it, I want to do a quick shout out to the Discord. It is free to join. And then I also offer premium perks, which include one-on-one coaching, trade callouts that I'm going to go over just now. I have an options selling course. I do giveaways. You can check it out. The links to the premium membership is in the description, and you can check out the other offers as well. But let's break down the playbook. So like I said, I sell puts and covered calls on stocks like SoFi, Riot, and Mara. Now, a few reasons I choose these stocks. One is because I actually want to own the shares of these stocks. Riot and Mara follow closely with Bitcoin, and I want that exposure to Bitcoin with actually having some sort of control. And when you sell options, you could control what you're acquiring the price at and selling the price at. So that's why I sell options. And if you pull up a sell put, let me actually pull up one just now. And I'm going to break down this one as well. But if you were to pull up any which one, you hit sell, it says max loss is 1,400. And that's where a lot of people don't understand is that the way to lose 1,400 is the stock needs to go to zero. And if you're selling puts on a stock that might go to zero, that's where you should stop. You shouldn't be selling options on stocks you don't want to own. But this max loss looks very scary and intimidating, but in reality, you don't lose that much. Yes, you can lose money, and you can lose pretty significantly if the stock drops pretty rapidly and a lot. But the good news is that your money turns into shares. It's not realized loss just yet. You can actually acquire the shares and then sell covered calls against it. And that's what I also do. And that's another misconception people don't understand is selling calls has unlimited risk. So let's pull up some calls I have and go to view all options. Let's switch it over to sell call and choose this 13.5, or this one is perfect, low delta. And the max profit is only 14 and the max loss is unlimited. So this might look really scary to beginners, but you don't really lose money with covered calls. The way to lose money is if the stock drops. So it's pretty interesting that Robinhood has it like this, because this is really just a naked call. If the stock rises past that break even or that strike, even though it's saying your expected loss, you don't lose money when it goes up like this. What happens is you're forced to sell the shares. So that's why you need to choose a strike price that you're comfortable selling. So, or you think the stock's not going to go past. And Riot, let's say we don't think it's going to go past 13.5, we would choose that. And if it does go past it on this expiration, I don't lose money. What happens is I'm forced to sell my shares. And also this takes into consideration that you bought Riot lower than 13.5. If you bought Riot at like 30, obviously you'd realize a loss. But if you bought it like 10, somewhere around there, you would actually have a realized gain of 300. And then also, or 350 you would have, and then also add that $14 of premium because you get paid to do these kind of trades. So it'd be like 360 of a realized gain. And that's what a lot of people don't understand is that selling options is a very safe play. And I choose it on these stocks, like I said, because I like these stocks, but also they're very volatile. So when they're very volatile, you get more premium, you get higher premium. But there is some kind of drawback with that is in the name, volatility. These stocks are very volatile. And therefore, your strikes and your options might go in the money. And if you guys don't know, in the money is not good when selling options. You don't want your positions to go in the money, which I do. And that's because these stocks have been running hot. The market has been hot. If we look at one today that I actually rolled, let's see if we could find one. I think it was this $11 call. Did I roll it today? I don't think so. I don't know if I rolled any today, if I'm being honest. I might have rolled a bunch on yesterday because I knew today was a half day. So let's go back to that $11 call then. So at the moment, this was going to expire on the 3rd. If we look here, it was set to expire on the 3rd, which is today. And I didn't want to sell my shares at $10. I wanted to sell them, or I didn't want to sell them at all. So I ended up rolling them. And I had to roll them because they were in the money. And I rolled them up and out. So another 30 days and up one strike price or one more dollar. So $11 strike price. And to do that, I had to pay $60. So yes, you don't always win doing this selling options, but when you zoom out over time, selling options is a lot safer. And now that this is at $11, my true break even is 12.6, and I could possibly roll it again. So even still, I'm not of concern because Riot is trading below 12.64. And if I let these expire and I'm forced to sell them at $11, just from this trade alone, I will have a realized loss of $60. If we go to that estimated cost, it's saying realized loss of almost $500, and that's because of this one trade. This second trade is still open, so it wouldn't be a realized loss of $400. It'd be a realized loss of $60. But then I also forgot to mention, or I mentioned before, you own the shares. So I own Riot at $9, and if I sell it for $11, that's a $200 gain. I'm selling it for $200 plus that premium. So overall, I'm actually winning on the trade. So even a play like this, which seems risky and just a lot of management, you're still winning. Or at least in this situation, you're winning. Now, you can lose if the stock drops a lot. And that's why I want to go into my next thing I have. And I hold cash. I hold 11,000 in cash on the side. So if the market crashes or the stock crashes, I can get in at lower prices and also manage any kind of plays. Because like I showed before, sometimes you do have to pay to roll. Obviously, you don't have to pay thousands of dollars. It was only $60. But if needed, I can use that money to roll. But yeah, this $11 is really just that emergency if the stock drops. So if we go back in just this year, during April, during Liberation Day, everything crashed and my portfolio with it. I was down 5%. I believe I was down almost 20%. It's not showing on here, but I'm almost positive I was down 20%. If I go to year to date, I was down 20%. So pretty insane jump. And I didn't panic. And I didn't double down, but I did put more money in on this day because I guess I am a risky investor. And I like to buy when the rest are fearful. And because of that, my account is actually up 6% year to date, beating the market ever so slightly. If I believe, let me pull up SPX, and this is just the market essentially. And this is up 6.3%, and I'm up 6.3%. So I'm pretty much at the same of the market. But it goes to show you that despite this crash and this volatility, you could still be green. Now, another strategy I like to do that is a little bit safer as well is a dollar cost average. And people might think this is risky because of what I do it on. I dollar cost average into crypto. And a few stocks, I dollar cost average into Robinhood and Sony. I'm trying to get a bigger position in those, possibly sell covered calls. We'll see, but just trying to build a position. And that's the same with crypto. I'm trying to build that position. And by dollar cost averaging, it removes the emotion out of it. And overall is a good long-term strategy because you can't time these things. So I'm seeing Shiba down 23%. And yes, that does hurt to see that it is down 23%, but I'm buying every day. So I'm buying below my average cost. And that's just the name of the game. You want to buy low and essentially either hold or sell high. And buying low means that you have to buy lower than you previously bought it at. And that's exactly what's going on. Because I'm negative, I'm able to buy it for cheaper. And on the long term, it is a good strategy. And although I'm doing it on risky things like crypto, dollar cost average is very profitable long term, no matter what kind of investment you're doing. That doesn't mean you should do this on anything and everything, but make sure you choose the right positions. And that is very important. I didn't really go over, but choosing the right positions is very key in my strategy. Because when I first started, I kind of chose randomly, and now I'm really zoning in on the stocks I want to own or the investments I want to own long term and actually do something with it. And just the last thing is I don't force trades. So I roll when it makes sense. I cut losses a little early. I cut some credit spreads. It's a little bit more of an advanced strategy. And I like to build positions slowly. I'm not buying options. I do have a few buying options that are long-term and very safe. This one's up 93%. This one's finally green, up 35%. So I do buy options, but not a lot. I don't do it often. I usually do selling options about 95% of the time. And then when the market crashes, I will buy a long-term option play. But overall, I don't force trades. That's why I'm sitting on cash. I'm letting this play out. If we see a crash, possibly I'll invest. And one opportunity I saw was Oscar. And let's go over what I did today, because I didn't do that today, but I did that this week. And Oscar crashed. It crashed almost 15% in one day, one trading day. And I took advantage of this opportunity. And I sold a put. So I sold a $15 strike. And right now it is still negative. And if the stock keeps dropping, I'm going to sell a put lower and lower, doing the dollar cost average strategy with option selling. And all I need is Oscar to stay above 15. If it doesn't, I'm forced to buy it at 15, which again, I'm okay with. And I'm okay with holding it for a long time. And I just believe the market overreacted to the news. There was some guidance removal from healthcare. And I don't know if it was Oscar specific, but I think it was the healthcare industry in general that got hit hard with this. So yeah, I didn't go all in. You could see I only did one play. I could have done 10 because I have $10,000, but I just did one and I allocated a portion of my cash. Other things I did is I rolled like I just showed you, and I closed a few trades for a loss, and I also took profits. So I had a few sell puts on Mara that were green, and it doesn't hurt to close a little bit early to lock in that gain. So if I go to my realized loss or gains, Mara, I'm up 158 or 83%. And I closed these trades early just because the wait wasn't really worth it. I was going to earn another $7 just to wait a few weeks. So rather than waiting to get that $6, I put it back into my account. If Mara drops, I'll sell another put. But that is what I am doing. I'm not afraid to buy back my puts for early for a profit. I'm totally okay with doing that as well. I don't need every single dollar. So I missed out on $6, which in the scheme of things isn't really much. But other than that, that's really what I've been doing this week, and not really changing my strategy. The only thing I'm changing is I'm not selling as much puts. I'm not investing as much because we're not seeing massive drops or massive opportunities. And I'm drowning out the noise. I'm not FOMOing in. And although this might look risky at first, doing all these option trades, this crypto, these volatile stocks, I'm only trading stocks I'm okay with owning. I'm making sure my delta is low and positioning sizing very controlled. My position sizing is very controlled. I'm also not going all in, especially right now when the market is hot. You want to be buying when the market is fearful. And lastly, my cash cushions me and lets me pivot without panic. So most people think risk is all about what you invest in, but the real risk is how you manage it. And that's what turns volatility into opportunity. So you can see my account is up year to date, 6%. Cash is ready for whatever kind of market condition, and my positions are in check. If I go down to here, my Riot was down. I'm up 30% right now, and I just simply held. If you go back to 3 months, it is up 67%. And I just held it. I held the dip. It went down pretty significantly, almost 40%. And I just held, or I did a little investing, but overall just held. And now we're seeing my account up 30% from just this position alone. So overall, my positions are in check. I'm seeing green everywhere. And I know this isn't going to last forever. And my account is finally sitting at 53,000. Hopefully we'll see it grow even more. But drop a like if you play the game your own way. And if you want to see more of my trades, links to the free Discord and then the premium version are in the description. It's $8 a month.